Hey guys, per usual, all information on this channel is for educational purposes only and is not intended to provide financial advice. Alright, so it is 12/28, July 27th. I haven't done a video on the actual market in a while, so I want to talk about that, where we're at, where we're going. I think there's going to be a huge move soon. I'm not the only one who thinks this, so let's go through some rationale as to why. So first, if you look at where we're at, a lot of people have been talking about Wyckoff, DJ Thistle, I Am Nomad, a bunch of other people. And basically, this was all of 2015. This was some of 2016 up in here. This was the ascending triangle. We had this happen, so we're kind of here right now as far as Wyckoff's concerned. And if you look at Wyckoff in a different way, you can see we have consolidation, flags, 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 consolidation, flags, flags, flags that break down. Okay, so where we're at right now, just based on market structure alone, says that we're headed up for more movement. We can expect more movement up. Okay, just based on market structure principles. So let's look at the weekly. All these charts are going to be in China. I'll post everything in the description if you want to check them out later. But again, you can see the Wyckoff structure right away. You have the consolidation, markup, throwback, markup, throwback. Okay, so we're here. The other thing that's important to note is this RSI trend, which has been in existence since the beginning of 2015. Another thing to notice is if we get another up movement here, it should break this plane, this horizontal resistance on the RSI. If it doesn't, I would suggest a super strong pullback because it would create a giant bear div if we get a higher high and we don't break this high here. So my up target is 66,000, let's say, and the low target's like 2750. That's just based on this weekly horizontal, okay? Now let's go to the weekly cloud. We can see we keep bouncing on this weekly cloud support, so that's a good sign for more up. We've got a bullish TK, bullish Kumo. Bullish TK happened weeks ago. So everything says bullish on the weekly cloud. Here's the pitchfork on the weekly. We can see it's respecting this pitchfork. It's respecting these levels. It's respecting specifically this quartile level here. And if we zoom into that on the daily, we can see it's respected this horizontal zone. Basically this entire move. We've even got a tweezer bottom on the horizontal right now, so that would suggest strongly that this is support and we aren't going lower. If we move on to the daily, first thing you should notice is the volume is super contraction mode, okay? Consolidation, sideways. I just drew in some horizontals here as far as support resistance zones are concerned. These are useful when you're taking a long or a short. You can say, I want to go long here. My stop is going to be below this horizontal. I actually did that. I took a long. My stop was below this candle and it got hit yesterday. Okay. So I'm not in a position now, but I'm definitely looking to go long. So if you wanted to go short, you could even say there's a horizontal here and you could short the current price to just past this horizontal. Okay. The other thing you'll notice is RSI is basically at 50. It has been for a while, which again says we're consolidating, we're tightening for a move. Something interesting on the daily Stoch is we're below 20. Now this could just keep ranging for a while, but it also suggests that we're at the bottom of a trend. We're at the bottom of the possible move. So if this flips up, it would be a very dramatic turn in price. That's what this is trying to say to me anyway. So if we look at daily cloud, these are the targets should price fall, okay? The targets are cloud support and flat Kumo. Generally, whenever I see a flat Kumo, we usually hit that flat Kumo. There's a cloud video you can watch. I explain that further. Something else interesting to notice is the TK lines. They basically converged. Here it is again here. Whenever you get that happening, that's your signal for a long or a short, because that says the longer average, the slower average caught up to the fast average, and so it's ready for another explosive move, either down or up. Now, it's not necessarily actionable on its own because this isn't a cross or anything, but it says, again, that all these charts say we've been sideways for a long time, the move is coming very soon. So now if we look at pivots and fibs, we can see we're below the monthly pivot, but we're actually above the 50% fib of this most recent move. So we might just continue to go back and forth around this area for a while. It's hard to really tell until we actually have volume on any significant candle and go in one direction or the other. But again, you can see this would be your next target. And if we go one way or the other, it will probably blow through several of these fibs. So don't be surprised if certain zones aren't respected. So now if we jump to EMAs on the daily, we can see that largely the 50 EMA has held price up and has continued to do so. A break of the 50 would suggest a possible touch of the 200 or a reach for the 200 at the very least. You're looking for a daily close below the 50. Should that happen, you can see how wide these are spread apart. You can also notice that when they cross, we get really big moves on the daily. Now that doesn't happen very often, and you can see here where this was about to cross and didn't, and we also got a big move. So here is the 4-hour cloud, and you can see it's a bunch of sideways nonsense. This is a great example of why you don't use the cloud on sideways. A bunch of basically noisy signals on what to do. It's hard to really justify any of these trades based on the 4-hour cloud. Here's 4-hour EMAs, and again I'm illustrating, last time these EMAs were this close to touching, we had a really big move shortly after. So using that same idea, I'm expecting the same thing. And this just shows the last time they were actually crossed, which was in April. And if we look at the past crosses on the 4-hour EMA 5200, you can see we got a huge up move here. We didn't actually get a down move on this cross, but then we got a huge up move again. So this was a bit of a lagging indicator for this whole move. But you can see the break of the 50 was kind of the impetus for that. So you can use that principle for the daily EMAs and say if we cleanly break the 50 EMA, expect a touch of the 200. And again, you can see here across a break of the 200, etc. Those are just previous examples to illustrate that point. Here's the hourly cloud. You can see it's just a downtrend. Again, not much to really trade on unless you're looking for smaller moves. We did actually break. We're like at 4,400 right now. But yeah, there's not much to trade here really. It's just like a move and then sideways, a move and then sideways, a move and then sideways, a move and then sideways. I don't know. That's not really for me, but if you're into that, go for it. This daily pitchfork, this hourly pitchfork actually looks pretty good as far as zones being respected and whatnot. Again, the current price is somewhere around 4,400 right now. So you can see these diagonals were respected. So these are kind of like the order blocks, the diagonal order blocks, if you want to think of them like that. So the next target would be this 4450-ish zone up here. And this is just the hourly EMAs. We have lots of crosses happening, but nothing really clean or actionable as far as like, can I trade a cross or not? Basically on the lower time frame, what I'm looking at here is that the 200 was support, and now the 200 is resistance. So a clean bounce on the 200 would suggest that's a good long entry signal, at least near term, because 200 flipped from resistance to support. So now if we switch gears to B-bands, my favorite sideways indicator, this is what they look like on the 20 setting. You can see we haven't gotten this tight very often. There's only one other time this B-bands got this tight was in 2013, and I'll illustrate that on another chart. But basically, this is the reasoning why adding on to the reasoning why that a big move's coming, it's time to pay attention, okay? You can see we had these huge moves, okay? Huge move. So that says a move is imminent. Now it's red, which means it's below the median of the bands. That isn't indicative of direction just yet, but it's something to pay attention to. So if I changed the B bands to 30. My rationale is on a chart on TradingView. I'll link it up in the description. But basically, Bitcoin is 24/7, and every other market is 5 days a week, 9 to 5. So the settings should really reflect the market and not some other market. So this was 2013, okay, October 2013. The last time we had a squeeze this low, and you can see the moves we had. So I just measured the move from the squeeze up, okay, and this ended up with a 900% move, but that's obviously not a guarantee every time. What I'm trying to illustrate here is that we got at least a 71% move on this, okay. If we move to this squeeze here, we got at least a 50% move and eventually 75% move when it was all said and done. And then if we move to these other squeezes, again, we're getting at least a 50% move on all of these squeezes. So I'm using that principle and saying, conservatively, we're going to get at least a 50% move. These are the targets. Now you can play this two ways. You can just go long and short right now on an exchange like One Broker, low leverage, low fees, and just hold it, close it when it breaks one direction, because it's not. It might fake you out, but it's not gonna go way up and then go way down. It's gonna be either a continuation or a reversal. It should be a continuation based on all the other charts I showed you. So yeah, if you guys have any comments, questions, concerns, like, dislike, share the video, let me know what you think, what are your targets, and happy trading.